Hi, it's David here with Futures Trading. I want to welcome my subscribers as well as followers. Thank you guys for coming on board. User 66 and Osmond, thank you so much for coming on board and thank you for all the support that you guys offer. Now, this is the must watch list. If you're new to the channel, there's timeless content, just an array of different information I've covered here. You're more than welcome to take a look. And I try to put some of the information together for you here. Some is in real time, some is not. If you want to review the trend as well as the price action method exclusively, you're more than welcome to do so, and they're in real time. The trading guide offers you just a little bit more information should you want to utilize that content there. But this is the turning points all in 18 minutes, and you don't have to use all three. Okay, but this is the universal approach to support and resistance, that chart scale. And I am the pioneer professional of that method. You've never seen anyone use the chart scale other than me. Now, there's a trend, and I do not use anything to depict what the trend is. And there's a price action method that shows up in any winning trade as well as that trend, and the chart scale, even that as well. So if you're taking winning trades, I can assure you that all of this information is there, and I just want to make you aware of it. All right, now live trades. I've traded everything from the business account, P accounts, prop accounts, and I've done at least 1,000 ticks in one trade. If you want to look at that stuff now. The trading psychology, this is information that can help you with your trading. Now, I can convince you logically why blowing out a live account several times absolutely makes sense. And of course, staying in a trade makes sense, and why you need to be in it makes sense. All right. Now, this is aspects of becoming a full-time trader should you want to utilize any of this information here. Now, this is what I do off screen. Knowing days or hours in advance where price should close would change how you trade. All right, now let's take a look at some of this information here. I went on and took the liberty to mark up the chart so I don't waste your time. So the trend, here it is, 7 bars. There's the trend. That's how much they're willing to pay you to stick around and get your paycheck. All right, so they'll go to trend distance. They did a trend back down here. Typically, after they make the trend, they'll lean over. I don't know if you've been with me anytime, but if you're new, yes, after they make the trend, they'll lean over or they'll pull back half of the trend. Okay, this is the trend. They pull back half of it, kind of went up here, but didn't get quite to half after making the trend. And then they pushed down, tried to make the trend distance and fail. Now I put the static levels right in this area because we had a trend forming. All right. So this to kind of give you a reference point. But before we look at this, we can go over here. When price pushed up, just all of what's in frame. When price pushed up here from 85 to 95, 95 to oh 05, there are stop placements, zone 1, zone 2. Then they fell out of it and kind of referenced it again and began to break down. They went past 45 on the way down, so they're supposed to get to the next static level down here, and that's 25.15, 15 to oh 05. But they came just shy of it, and then they turned around and made the uptrend. Now, the information here, as I said before, this is a trend. They went halfway into it. They wanted to turn around. Now, before doing so, they made a trend down. So you would go, if they're coming back up towards the 55, the stop could be at 65. And then they pushed out, went down to 45. And as you can see, they hit it to the tick. Now let me get the price for you so you can see for yourself. You would go with the low. That's the L 45. Okay. And then of course here 45. And then they gave you the push back into the 55, okay, coming back up towards 55 to 65. And then they turned down, kind of went outside that 45, but then found the support and then decided to push up. Now, with the statics up here, I just projected them forward. But if you're playing it back down, it would go leaving 95, coming back down to 85. It's 85 to 75. They went through it, not a problem. They go back up to the 95, coming back down. It's usually 95 to 85. They went through the 85, but they don't supposed to go past the 75. All right. Now, when they came back down again, they tested it once again and again, not breaking that 75, and they pushed up and knocked out that oh 05. So once they knocked out the oh 05, which is the 95 stop, they supposed to go to the 15 to the 25 and 25 to the 35 for a test. They got really close, turned around, kind of what they did down here. Came back down. Now, if they're coming back down, you would go 95 to 85. They came in there and then they jumped up, but then they wanted to go ahead and give another test at that 85, and this is where they ended. Now, I'm just trying to keep track of the alert because I'm going to come back and cover this. Now, the price action pattern here, okay, you just want the mid above the high. Now, it doesn't mean that this bar needs to be closed. It don't. So you can take the bar while it's moving up and down. If the mid is above that bar's high, just jump it. Hard stop can be here. That's the colored bar with the level. Okay, covered colored bar with the level. And here, kind of the same scenario, but you get the mid below the low. Okay, now over here is mid above the high. mid below the low, the halfway point of this bar. Okay, however you understand it, below the low, or the low is above the midpoint, whichever way you understand it is above, okay, or below, whichever way. No close back above here, hard stop, colored bar here, red bars level, okay, and you can go down. Now I coded that indicator, that's all it is. All right, now you can go down. Now you can tell on the way down, sometimes if the bar goes outside the high and both sides, you just want to make sure that that bar's low is above that midpoint. Now I have the midpoint, the black line on every candle is the midpoint. All right. That high is above that low. I mean, the midpoint. The high is above the midpoint. All right. So I'm sorry, the low. Now I'm getting a little bit confused here. The low is above the midpoint, but it went outside the top. So it becomes both. All right. It becomes the no close and the hard stop. Here, they can close above the no close bar. They just shouldn't hit that stop. And then you can tell how they referenced this one here. They kissed it to the tick and then they fell down, came back and got above it. But there's that bar stopping it there. Kind of fell down here. Okay. Now, in this information here, there's the red bar. They pulled up to it again and then they came down. They jumped up, kind of cleaned this stuff out in here. But here's the hard stop and the no close. Now, the no close, I'll put the crosshairs for you. Okay. You can tell right here they never closed above that bar and then they took off back to the downside. All right, now they turned around. Now, before doing so, let's take a look at this stuff here. There's a no close bar here. They kicked that stop, but notice how they never closed beneath that price. All right, and then they pushed up. So you might want to pay attention to a little bit of that too. All right, so that's all you would need to do. Now, that's that information there. Now let's get into the targets. First, before I do that, here's the chart scale. And I am this is the universal approach to it. And I am the pioneer professional of this method. No matter how many people you may see try to copy this, you don't need anything else but the frame of the chart. The center of the scale is important. Here's the upper part of the scale. And again, the chart scale may adjust. That's not what you focus on. Keep your eyes focused directly into the upper part of the scale, right in the mid of that. All right. Now, the center of the scale is here. I got an indicator I just put up there to center it. All right. I can't get this one to do it, but that's okay. You can just focus right there. And then, of course, the lower half right there. All right. It's really simple. You don't have to use all three of these methods, but because of my time of doing this, I've noticed that these time windows tend to fall directly in line with this scale. All right. Tend to fall right there. And then, of course, the static levels, they do too. All right. Now, that's just something I want you to know. Where they're going. All right, so let's take a look at where they're going. We want to keep them above 83.54. Just if they can do this, and I surely hope they can for you, you can get them up to 92.99, I believe. So let's go take a look. Yeah, so 92.99, you can see them all the way there, long as they can hold above that 83.54. If not, they're going down to that 80.96. Now they can very much go to 80.96, come back above this 83.54, and then just rip and go ahead and take off and go get that 92.99. All right. But let's see if they can just stay above there. All right. So I wish you all the best with your trading. Take care.